Hello everyone, this is Dare here. Hope you're well. Let's get into the action today. Right, we are talking of the Ichimoku system. Okay, this is a system that not many people will discuss in Forex. I guess because it's a bit complicated, but today I want to help to dissect this system. Okay, we will discuss the history of the system, introduce it to you, what are the components of Ichimoku. We talk about the cloud, we talk about the support and resistance, how we generate signals, and then we'll bring it to conclusion. My hope is that at the end of this presentation today, you will be able to make use of a Ichimoku system in your trading. You'll be able to see it, how it works on the chart, how you can generate reliable signals from it. Introduction. So the cloud itself is known as Ichimoku Kinko-yo. It's a very good indicator that defines support and resistance. It also identifies trend directions, gauges momentum, and provide trading signals. So Ichimoku Kinko-yo translates into one look equilibrium chart. With one look, trader can identify the trend and look for potential signals within that trend. What is the history? So the history is that a guy called Goichi Ozoda created this system back in 1968 after more than 20 years of testing. Right, these are the components of Ichimoku. Okay, the first one is called the Tenkan-sen, the conversion line. That's the English word for it. The second one is the Kijun-sen, baseline. That's the English word for it. The third one is the Chiku span or the lagging span. We have the Sheku span A, or we call it leading span A. This is this line here, the top line. The Sheku span B, or the leading span B, which is this line below here. And in between the Sheku span A and Sheku span B, we have the Kumo, the cloud. Okay, so we are going to discuss each of these indicators one after the other. Okay, see the importance of their role inside this great system. So Tenkan-sen. Tenkan-sen is the closest indicator to the price. Look at it as 9 simple moving average. Although it is not a simple moving average, it is calculated by having a high plus a low divided by 2 over the last 9 period. Okay, high plus low divided by 2 for the last 9 period. The angle is very crucial into how we use it, and it measures a short-term trend, and we use it to generate signals. The next one is the Kijun-sen. Let me show you in the components. So we have talked about Tenkan-sen, and now we are talking about Kijun-sen. Okay, the blue line. The blue line, Kijun-sen. All right. So like his brother, it's also calculated by using high and low divided by 2 over the last 26 period. Remember, the brother, which is the Tenkan-sen, is over 9 period. The big brother Kijun is over 26 period. Also, is used to measure trend, even though over a longer period, and we use it to generate signal. The next indicator is called the Chigu span. Let me show you where it is in the components. This is the Chigu span. This indicator here is the Chigu span. Tell you what it does. Chigu span, it's calculated by taking the current close price and shifted it backward, 26-day backwards. Okay, so it is the indicator that looks like this and is always lagging behind the price. This is the current price here, and this indicator is always 26 days behind. Okay, why do we need indicator that is 26 days behind or 26 period behind? Because it allows us to quickly see how today's price action compared to the price action of 26 period ago. So sometimes when you look at it, immediately price is above Chigu span, you know, oh, we are in uptrend. Price is trading below Chigu span, yeah, we are in downtrend. It is very important. The next indicator we look at is called the Shekel span A. Okay, let me show you where it is in the component. This is the Shekel span A up here. We'll talk about that. Then we move to Shekel span B, this line here, and in between them is called the cloud. The cloud is in between Shekel span A. This is leading span A, Shekel span B, or the leading span B, and between them is Kumo, the cloud. So let's go and check them out. So Shekel span A, as we said, form the Kumo along with Shekel span B. So how do we calculate it? We use Tenkan-sen and Kijun-sen. We add the two together, divided by 2, and shift it forward into the next 26 period. Let's show what we mean. Okay, how do we get this line? This line is by taking the value of the red line, Tenkan-sen, add it to the value of the blue line, Kijun-sen, and divide it by 2. Not only that, we now project it 26 period forward into the future. Fantastic. Same thing here with the Shekel span B. We calculate the 52 period, high and low of the last 52 period divided by 2, and we shift it forward into 26 period forward. So this is the beauty of Ichimoku system. Is just one of very few indicators or system that can tell you the gauge of trend in the future in the next 26 period. Okay, so Shekel span A, which is this line here, is shifted 26 period as we said, and the beauty of it is it allows us to quickly see at a glance where support and resistance from 26 days ago reside. Similarly, Shekel span B, we have looked at that as well. It also allows us to see longer term measurement of equilibrium ahead of price. So how do we get that? We use 52 period high and low divided by 2, and we project it 26 period ahead of time. Okay, actually it is the longest time view of equilibrium within this system. Reason, you know, we already have the first indicator, which is the Tenkan-sen, which uses 9 period. Then we have the Kijun-sen, which uses 26 period, and now we have Shekel span, which uses 52 period. So it's the longest indicator here with longest period. Okay, the Kumo. The Kumo is the main part of this system, of the Ichimoku system. So between the leading span A and B, you have the Kumo. So uptrend is when the price is above Kumo, downtrend is when the price is trading below Kumo, and when the price is inside the Kumo, it's a flat trend. There's no trend. Okay, because the Kumo or the cloud is shifted 26 days forward, it provides a glimpse of future support and resistance. Let's quickly look at it. Look, this is the current price, and this cloud is actually plotting in the future, to the future, 26 period to the future. So it's providing us a glimpse of where support and resistance will be in the future. Okay, cloud thickness. So cloud thickness, if the cloud is thick, it shows that it will be difficult to break through very easily, and vice versa. When it's a thin cloud, it shows the resistance is not that strong. So we talk of resistance and support level. Okay, in an uptrend, the cloud provides support. The first line, which is the leading span A, is the first line of support. The leading span B is the second line of support in uptrend. So prices come up, bounce off the cloud, comes down, bounce off the cloud. In downtrend is the same scenario. uh, Chigu span A is now below, and leading span B is now above. So prices touch the cloud and bounce back, touches the cloud and bounce back, and this has become a resistance for this price. So how do we analyze the cloud? Okay, looking at here, we see price penetrate the cloud here, it breaks the cloud and trends up. So remember, this is the leading span A, and below is the leading span B. In between them is the Kumo, is a cloud. Cloud has now turned to support, so it's supporting this movement. Cloud is supporting this movement, right? And finally, cloud is broken downwards, and then we change direction to bearish. You see it is now red here. So when we are uptrend, we are looking for buys, bullish signals. When we are downtrend, we are looking for sell signals. Similarly here, this is a downtrend scenario. We broke the cloud downwards. We see that the cloud has now turned to resistance here. It's helping us to protect the price falling. Also here, it protects the price from falling down. We see that the leading span A and B are swap position. Now leading span A is below, leading span B is above. Finally, the cloud is broken here, which signifies change in trend. So we are now uptrend, and hence we have our cloud green, and this cloud is into the future. 26 period into the future is giving us idea of where support will be. For example, if these guys move up and try to come down, it will make this support. If it cannot break this support, it's likely going to trade up. But if it breaks this support downward, then our direction has changed. Trend will change to bearish. Now we are looking to how we generate signals. So we have two methods of generating signals. One is two lines crossing each other, the Tenkan-sen and the Kijun-sen. And the second one is price crossing one line, the Kijun-sen line. The Tenkan-sen is the red line, the Kijun-sen is the blue line. So when red crosses over the blue, it's a buy. When red crosses over the below the red, it's a sell. Okay, now let's look at how it works. Okay, so when we talk about signal, there are three types of signals: the strong, the neutral, and the weak. Okay, the strong signal is when the bullish signal happen above the cloud, strong bullish signal. When bearish signal happen below the cloud, strong bearish. Okay, when signals happen inside the cloud, we say it is neutral. Okay, and when signals happen in the wrong direction of the cloud, we say it is a weak signal. Example, bullish signal happen below the cloud, it's a weak signal. Bearish signal happen above the cloud, is a weak signal. Here are the examples. Okay, this cross of red above the blue happens below the cloud. It happens below the cloud, so we say it is a weak signal. Here it happens above the cloud, we say it's a buy, strong buy signal. And here it happens inside the cloud, we say it's a neutral buy signal. Okay, let's look at the downtrend. It happened, the cross of the Tenkan-sen downwards with the Kijun-sen, the red cross downwards on the blue is a sell signal. Inside the cloud is neutral. Below the cloud is strong. Below the cloud is strong. Above the cloud is weak, sell signal. Below the cloud is strong. And finally below the cloud, the Kumo is strong. Okay. Now let's look at typical buy examples. So this is strong buy. The Tenkan-sen crosses above the Kijun-sen, above the cloud. That is buy, 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 above the cloud. See what happened is the Kumo, the cloud is now turned to support for us. So prices are touching the cloud and they keep bouncing up. And finally, cloud broke. Prices now is trading below the cloud and we are now downtrend. So the great thing about Ichimoku is that it keeps you disciplined. It disciplines you into your trading. So along all this while, you never look for sell because you are above the cloud. And from here onward, your perspective about price has changed. Now you are looking for sell signals, as we see here. So under the cloud, you are only selling. Okay, so you're selling under the cloud. Strong sell. The red crosses below the blue. This is a neutral sell because it happened in the cloud. Strong sell, and bank, we broke the cloud and suddenly we change trend to uptrend from here onward. So we have discussed how two lines crosses each other, that is the red and the blue line. Now we want to discuss the second method of generating signals. This time it is not through two lines crossing each other, it is actually a price crossing a line. And which of the lines? The blue lines, the base line. Also, we have three types of signal for this type of crossing. We have the strong, the neutral, and the weak. As usual, when we have a bullish crossover above the Kumo, we say it is strong. When we have the bearish signal below the cloud, we say it is strong. When the crossing happen in the cloud, we say it is a neutral. And when the crossing happen in the wrong direction of the cloud, we say it is weak. Okay, now let's see some examples. So now remember, it is not lines crossing each other. Now it is price crossing the blue line. So price touch this blue line and fall back, sell signal. Price crosses this blue line and go back up, that's a buy signal. Okay, also another example, price touches the blue line here and fall down again, that's a sell signal. Price touches the blue line, which is the Kijun-sen, that's a sell signal. Prices touches the blue line, Kijun-sen, and fall back, that's a sell signal. And here is a buy signal. Price touches Kijun-sen and goes up, that's a buy signal. Okay guys, now signal summaries. So we have seen 4 different types of signals. Okay, the big trend is when price move above the cloud. In a bullish, it's a bullish signal. You see price break through the cloud, you say, yeah, the trend has changed to bullish. Secondly, when cloud turn from red to green, it means trend is changing, the momentum is going towards bullish. Okay, when you see price move above the baseline, that's a bullish signal. When you see the conversion line move above the baseline, that's a bullish signal. Okay, for a bearish signal, price move below the cloud, that's a trend. Cloud turn from green to red, that's also telling us that we are bearish. Price move below baseline is is a bearish signal, and the conversion line move below the baseline is also a bearish signal. So in conclusion, guys, the Ichimoku cloud is a comprehensive indicator designed to produce clear signal. It is one of those indicators that keep traders very disciplined. You only look for trade, buy opportunity above the cloud, sell opportunities below the cloud. So once you establish the trend, then you go along the trend. The strongest signal is when conversion line, that is the Tenkan-sen, crosses the Kijun-sen. The conversion line crosses the baseline. That is the strongest signal. And when the crossing of the red and the blue happen above the cloud, when it crosses up, that is a very strong signal. And the same thing, very strong sell signal when it crosses down below the cloud. Okay, so it is very important to trade in the direction of the bigger trend. So guys, this is the Ichimoku system. You can practice it with conjunction with any other indicators. There is no harm in it. It is well developed and it's well adjusted to different market conditions. You can use it in forex, you can use it for stocks. In fact, it is designed for stocks, but it has been imported into forex trading. So guys, I hope I'm able to explain to you what is Ichimoku system, how we generate signals from Ichimoku, and I hope you'll be able to open up a chart, put Ichimoku on it, and then you can see great signals that you can find using this system. Okay guys, remember to subscribe to the channel so that we can have more quality videos out. And thanks so much for all of you that you have subscribed already. I've read most of your great comments. In fact, this video was a product of one of your comments. One guy says, can you explain to us how Ichimoku cloud work? So I try to do this. So if you have any burning question or topic in your mind, shoot it out. You know, you might not even be aware that we can do a video for it. Okay guys, once more, thank you so much, and I look forward to the next video. Signing off now is Dare.